Hi, this is Fernando Herboso with Herboso & Associates. Today we're going to be speaking about short sales and more specifically about short sales with Bank of America. This is going to give you a little bit overview of how you can do a short sale with Bank of America. These are the required steps that Bank of America asks you to do before you can go through the process of a short sale. First of all, I want to congratulate you because most of your neighbors are going through the same situation and you are probably one step up front of them by being proactive and seeking a solution to remediate your problem, which is having a home that's underwater. And I want to congratulate you to take this first step. So we're going to start with what Bank of America requires for you to do in order for you to do a short sale. And the step number one is you have to go through the refinance process. They want to see if possible you can actually afford to do a refinance based on how much money you're making every month, the salary amount, and how much money you owe to them and all other creditors. Basically, the refinance may be helpful for you because they may change a variable interest rate to a fixed rate, or they may actually give you a better fixed rate so they can lower your mortgage payments a little bit more. This is a very important step that you should definitely consider. When the step number one does not fit your current situation, then a financial counseling also could be a course that the Bank of America will require you to do. This is when you make enough money, you should be able to afford to make the mortgage payments, but you can't because you owe so much money to other creditors and you put yourself in a bad situation. The Bank of America will require you to go through a financial counseling before they can consider anything else with you if this is the case. Step number three, loan modification. A loan modification is basically a way of when the bank realizes that you may not be able to afford, but you're very close to that. You may not be able to afford to stay in your home, but you make almost enough money to stay there. So Bank of America will find a way how to reduce your mortgage payment, how to structure basically a loan that will help you make the payments and not give you so much stress every month. So this is definitely something that you should consider, and you gotta remember a loan modification is basically you doing another loan. You're definitely signing up for the next 30 years or maybe even 40 years, and make sure it makes sense and it fits your plans for the future. When loan modification does not come to you as a good way to remediate this problem, and basically the next step Bank of America will probably do for you is a short sale. This is when a bank will allow you to sell your property to a buyer and basically sell it for what the actual cost of your home is now and not for what you owe to Bank of America. That difference is a deficiency. That difference from what you sell in your property to what you owe to the bank is a deficiency, and a proper successful short sale, that deficiency could be completely removed by Bank of America, so you basically walk out your home without owing any money to anybody. So this is a very important step for you to be able to understand as far as doing a short sale and the difference who is representing you to do the short sale. Be very careful on the short sale and who's talking for you to the bank. When the short sale actually becomes null, like something happened and then you cannot find a buyer for your property, or nobody wants to buy the property, or something happened with the investor, then the next step is actually a deed in lieu of foreclosure. This is when you give your keys to Bank of America and basically you remove yourself from the house and you say, I don't want to pay for this anymore, here are the keys. Obviously this is not going to relieve you from any deficiency or your obligations with Bank of America. You need to speak to an attorney about that. And finally, if everything else fails, the foreclosure. This is something that is really something that you need to avoid at all costs. 7 to 10 years of bad credit. On top of that, the bank probably will come after you for a deficiency. They could be filed against your future wages. Not a good thing to be, and you need to be very careful with the foreclosure, and you should avoid this at all costs. The new program that Bank of America has is called the Cooperative Short Sale. This is very similar to the half a short sale. Very important that the person helping you understands this program so they can help you to take the right step for you. So at the end, who are you going to call? We would love to help you. Please give us a call at 240-426-5754.